challenging trading day, our third worst trading day on the year. We had a January day where we were down about minus 16K, and one in May we were down about minus 11.5K. This is about the third worst day of the year, and it's equivalent to two about minus 5.8K, 5.7K days, which we've had these back and forth as well. So I prefer fast drawdowns, but minus 11.350 on the day in live trading, really extreme chop, extreme back and forth price action, extreme bullish signals, and then getting slammed several times today. We'll go over the market and discuss that. The good news, three good points about this right now is one, the first point is we're up on the month, a quarter and year. Two is that fast drawdowns, this is a drawdown alert, so that's opportunity to get in, drawdown alert, because the hypotheticals are minus 18,892.50 after today's trade. Our live result drawdown is minus 14,446, and we are better than the hypotheticals because of that CPI day. And then we exceeded broke through equity peaks by 4.5K, and then have gone back into a drawdown since last Thursday. The last 2 days, ever since Chair Powell spoke, the market has just been crazy, back and forth, extreme chop, a lot of energy in a very narrow range. And so oftentimes when that happens, there's a big move coming. We had a big move on Thursday, and now the market has just gone crazy. The dip buyers are trying to rescue this market, and it'll be interesting to see if they do win, or if the market rolls over again, or if it chops more into the end of the month. We have strategies that do take advantage of choppy market conditions, but the kind of chop since Jay Powell spoke on Friday morning has been difficult. And so my points went away but the first one is up on the month, number one. Number two is a drawdown alert, and number three is typically you see a lot of times when you see this these large days, either winning or losing, they kind of are clustered together. We haven't had a big 5-figure 10K day in a while, and certainly we haven't had a 20K day since May the 5th. That was an equity peak day where we had a 20K day, and so we haven't had one of those in a while. And typically, you get bigger winning and losing days in series, and rather have the losing days first. And so then, the mindset is that really unfavorable, choppy price action, and then a breakout and more favorable price action. Like I said, we have strategies for choppy prices as well, but sometimes it's really extreme. Like today. The market postured a lot of long signals at the open, and typically that's been successful for us. Then it ran down here to the lows, then it rallied up here, postured, and then ran down here to the lows, and then ran back up. And so it was a very, very tricky day with lots of losing trades, and overall just a challenging day. You would like to get rid of all of these days. And I'm going to show you what the portfolio money management algorithms would have done. So once again, I'm optimistic because it's a rapid drawdown. It gives us a drawdown alert. We're up on the month, and oftentimes bigger winning days are near bigger losing days, with the winning days being slightly bigger. So holding out for one of these big winning days, managing our risk up on the month. And if you go back to break even on the month, you're at a worst case drawdown for the portfolio. I've updated the portfolio calculator. I'll show you that. So these are the results as of Friday. So coming into today, minus 71.1250 or 71.2250 on the hypotheticals, nearly a 25K drawdown. After today, it's around 18, 19K, about 19K drawdown is where we are. So about 6K from a worst case drawdown. So that is the drawdown alert after hitting the equity peak 2 days ago on Thursday. So here is the price action. You see the overnight trade was smooth and higher, and then the day session started and lots of chop. Ran down to the lows below 15,000, ran up here, ran down to 15,000, ran up to here, and just really threw a lot of signals off. A lot of energy in a very narrow range. The VIX is down. So even though I think there ought to be some follow through on this, it's rare to see a sell-off like this in recent years. Even though a sell-off like this is more normal, it hasn't been as normal in recent years. And so there ought to be more normal days like this. There ought to be more follow through. The extreme liquidity keeps propping it up, and it just looks unnatural. But we have to go. We have to trade what the market gives us, and I'm anticipating a higher move because of the overall trend in the market, as well as the VIX being lower, down around. It was down today, so minus plus 15, and lots of energy in a narrow range. Could be a big breakout. The thing I would like to see happen is the breakout to happen during tomorrow's session instead of overnight. Getting a big gap up of 200 or 300 points would be less favorable than for the market to trade around these levels and then break out. But we will see what happens with tomorrow's trade. So going over the trades on the day, this is Tick Pulse, minus 625 on Tick Pulse, minus 812.50 on Adaptive Moving Average, minus 825 on Tick Wave, plus 400. The chopper strategies did well, pretty well. Plus 400 on opening chop. Dynamic turnaround was minus, what was that? Minus 825 on tick count trend dynamic turnaround, minus 825. Again, these numbers aren't showing up on the axes all the time. Then plus 1,062.50 on chop news, and tick chop news was 525. So the chopper strategies did really well in this market on the S&P. Let's look at the Nasdaq strategies. We'll look at the micros as well. Now the Nasdaq strategies 1 for 12. So we had 12 strategies trade today, mostly on the long side, and only one strategy was a winner overall, and that was a small winner, the Mag 7. Only one, let's see, that was 195 on Mag 7, and then Momentum Reversal had 2 losing trades, and so getting stopped out near the highs here, getting stopped out near the highs there, and then looking at the Cover 3, minus 920. You can just see this market. We had these trades right here. Robot took the long trade. We had a lot of success with the gap continuation. EVP1 long only, and then tick pullback. You can't see that trade. It's back there. All got in right at the beginning of the day, and then the market popped higher, gapped up, pulled back, popped higher. That looked bullish, and then it got slammed. Then it rallied, and then it slammed, and then it went sideways, then it slammed again. Then it just went into smooth rally mode, like it was going to go take out the highs of the day, which looked pretty good, and then it slammed it again, and then went in smooth rally mode, pull back, rally mode, pull back, and so it was a lot of chop in this market, a lot of energy. If you watch the order book, you can see the speed of the market, and so minus 920, minus 650 on Viper, one loser, one winner. Gap continuation, minus 725, minus 425 on Robot, minus 725 on AT2022. EVP1 was minus 7. Let's see, minus 1,025 here. Minus 725 on EVP1, 700 stop loss long only. And then Tick Pulse was minus 625. Tick count trend was minus 625. Tick pullback was minus 1970. Mag 7 was plus 195, and momentum reversal was minus 2450. I've seen stealth bull markets that like to run stops, but I've not seen a stealth bull market run stops this much without also more down days. So typically, if there's this much stop running, it eventually gets caught up in more of a precipitous downtrend. We're not seeing many precipitous downtrends. We're seeing lots of stop running that affect short-term long trades using leverage. And so let's look at the micros. So tick pulse minus 62.50, going over the micro S&P strategies, minus 81.25 on adaptive moving average, minus 82.50 on tick wave, plus 41.25 on opening chop, minus 82.50 on tick count trend dynamic turnaround, plus 106.25 on chop news. Tick chop news is plus 53.75. Nasdaq micros minus 92 on Cobra 3, minus 85 on Viper. Gap continuation minus 72.50. Robot minus 42.50. AT 2022 minus 72.50. EVP1 was minus 102.50. EVP1 long only was minus 72.50. Tick pulse was minus 62.50. Tick count trend was minus 62.50. Tick pullback was minus $200.50, and Mag 7 was plus 19.50, and minus 245 on momentum reversal. The trades were I'm showing the trades were the same between the micros and the Nasdaq, with 1/10 of the value on the micros. So once again, a extremely harsh amount of stop running with the advanced decline line. Look at the market internals plus 1339. You see the ticks hitting up at that plus 1,000 level. Hasn't been doing that a lot lately, and typically that with the gap up are typically more bullish, but you just get this tightly wound, going up, slamming, going up, slamming, going up, slamming, going up, and then sideways. So these are the final trades on the day to start the week on Monday, August 28, 2023. Looking forward to the rest of the month, and the three highlights that we're looking at are a drawdown alert, number one. Number two, we're still up on the month, and if we risk back to break even, we're at the worst case drawdown, and so it's always good to be up your worst case drawdown on the month. Manage that risk accordingly. And number three is the cycle of winners and losers, puts us in line for a potentially a larger winning day with no guarantees of that. So optimistic as we go into the end of the month with 3 trading days left in August. I forgot to go over the portfolio money management algorithms. Now the market position trader for the Nasdaq has a daily stop loss. So this one was only down. It used its stop loss. It was down on the day. It was down 4,000 on Friday, a little bit larger loss than we had a $3,000 loss in the portfolio, and this was down 4,000. So $1,000 larger loss on Friday, and today a $3,100 loss instead of $11,000 loss. This manages the risk on the day a little better, with less potential getting stopped out and not capturing or recovering. The risk is about the same as the portfolio, the worst case drawdown, but your daily risk is smaller. Now the average entry price version of this has a lower drawdown and a bigger net profit as a percentage of drawdown, and it stopped on a $4,000 loss today as well. So it lets us manage the risk intraday a little better. Recent equity peaks are stronger. Minus 3,100, and then minus 3,050 on Friday was minus 3,050, and minus 3,100 today. So this is only in a $6,100 drawdown instead of the $14,000 drawdown that we're in, and so upside is pretty good too. I need to compare. Our portfolio includes the S&P, and the market position traders only include these strategies separately. So wanted to point out what the market position trader could do, as this has the ability to look at all the strategies at once. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.